Hey there, YouTube family. This is Josh with Stocks with Josh. The markets are in turmoil. We have a sea of red. Let's take a look at that. Microsoft is down 4.24%, Google down 4%, Apple almost down 4%. So we know what's going on. We know that the markets are uncertain about what's going to happen this Wednesday with the Fed and the interest rates. We're at a critical point. I talked to you guys about this Sunday. We've had 2 full quarters in the red, and we know that if he comes out hawkish, then it's really going to tank the markets. So it's my view that even though we ought to be more hawkish and we ought to raise the interest rates faster and higher, it's at a critical point where he may need to soften up to keep from pushing the market into a recession. Thank you guys for joining me today. Hit that like, then the subscribe if you're new to the page, and the notification bell, and throw a hi in the comment section. Well, today we're talking about the Verb Small Account Challenge that I started a couple months ago. Where are we at? How's it looking? We're going to take a look at the technicals. We're going to look at the MACD and the RSI so we can continue to understand and learn on this journey. Our amount of risk is only $200. We're trying to move it to $400 by viewing it as a technical analysis trade. We also have looked at the fundamentals. I think Verb is a good company in a very bearish market right now. So if you have not joined the Small Account Challenge, then you're actually in a better position than we are because you can get a better price. If you hit the link in the description of this video and download moomoo and fund it with $200, right now you get a guaranteed $56 to $60 for doing that. You get up to 8 free stock, and you have the chance of winning $25,000. I'm doing the Small Account Challenge. Larry's doing the $1 Million Cup of Coffee, the DCA of $5 a day, and he's doing that right now on Webull. Both of those links are in the description of this video. Okay, I just want to do a recap. We bought Verb when it was in despair. Despair was qualified by me being below the mean. The longest line of support was $1 on mean, roughly 98 cents. And we bought it after it broke through that. And we didn't just lump sum buy. We broke up our orders into $50 purchases at certain percentages down. We started as it broke below 60 cents, and we bought from 58, 56, 48, and below, and we ended up with an average price of around 0.46. If you've joined the challenge in the recent days, your average price could be much lower. We are going to hold this and watch it until the market recovers, I believe probably third quarter, maybe fourth quarter, and see it go back up to the mean, which will be a strong area of resistance because it used to be an area of support. I'm wanting you guys to learn a little bit about the RSI, the MACD, areas of support and resistance along the way, and hopefully we're all going to make a little bit of money on this and build this Small Account Challenge up through a couple trades into next year where we will use it to short the market and short the recession. That's basically the game plan. So let's go into the charts real quick. We're going to look at Verb and the price action. So we've had these lines drawn. We broke beneath that when the market really capitulated some weeks back. And what we're trying to look for and what we want to keep from happening is we want to maintain this previous low of 0.289. Currently today it broke down to 0.35, and I'm going to tell you that what we want is we want to see higher lows. And so right now we had a nice little dip today. We want to see this rebuild, and we want to see it hold moving forward the 0.35. That's how we know whether or not we are moving in the right direction. We've had a long trend down. We need to begin to consolidate and begin to create a new trend up. But to know whether or not the knife has fully fallen or the bleeding has fully stopped, we need to begin to maintain these, what we'll call these higher lows. The lowest low that we're wanting to protect at this point is 0.289. We will not buy any more Verb on only if we broke that threshold and if it were to come down to 0.20 cents, because that's the only way that we would bring our average to a place where it needs to be. So we're going to stick with the $200 that we've purchased, and we're going to be looking at these lows and hoping that we are going to begin to stair step and consolidate moving forward. Let me throw in an indicator for you guys. We're going to throw in the RSI, which stands for Relative Strength Index. You can do that by going to your chart. In the top, there's always a button called Indicators. It'll give you a little search. You type in RSI or Relative Strength Index. You select it when it pops up, and it should populate your chart with the Relative Strength Index. I want us to take a look at the weekly chart this time. It's a little bit of a longer view. What we're looking for in the RSI right now is we're looking for this, we've already come down, we've broken below extreme oversold. We have gone over the signal line. We're retesting the signal line here, the yellow line on the RSI, and we're wanting to see it bounce up from here. If we can keep this, if this can continue to move this way, even though the price is now consolidating, that would be bullish divergence. That's what we're looking for there. I also want to take a quick look with you guys on the daily. I'm going to go back to the daily real quick, the daily RSI, and point out that that one of the areas that we're looking to support, let's compare this particular movement here, okay, with this movement back here, okay? So when it broke below and was oversold, it came back up and it tested this 50% mark. And I want to remind everybody that if it's above the 50%, then the bulls are in control. If it's below the 50%, the bears are in control. So when it came up to the place where the bulls would take control, that's when the selling began to increase and the bears got dominance again. But after it came down, right, it made a higher low on the RSI. It went back up that second time and pushed through and gave us this beautiful movement up, and it gave us a period of time in which the bulls were in charge. Now, let's imagine that that's where we're at right now. I don't know, but that's the type of thing I'm looking for. We've come down. This is our oversold. We've made our move back up into this region. We came to that 50% mark where it got us up to around 60 cents. It's pulled back. We're looking for it to find support right now, okay? I drew this little trend line as a potential support line, right? And we want it now to gain momentum and break above that 50%. That would be very bullish and would indicate that the end of the current downward cycle has concluded, and we're going to be hopefully stair-stepping our way back up to our closing price of 98 cents. So that's a basic overview of the RSI. I'm going to jump in real quick with you guys on the MACD. We're going to do the exact same thing there. I pulled up the indicator. I'm going to type in the MACD. What we're looking for is the moving average convergence divergence chart. I'm going to click this one off for you all so it's easier to read, and move this up a bit. And I'm just trying to make you guys familiar with some of these charts. So if you look back in history to this area, again, right before we had that monumental move up, we began to see the MACD was essentially stair-stepping itself, bouncing, the signal line bouncing off of the 1225 line, all right, and moving up. We had, in the histogram, it went green, it pulled back, right, and then it went green again. And once it did that, that was pretty bullish. That bounce off of the signal line bouncing off of the 1225 EMA line was pretty bullish. And right now we have a kind of a similar setup, and that's what I'm looking for. Nobody, unless you have experience with these charts or somebody's teaching you, it is really hard. I mean, they can explain to you what a MACD does or what an RSI does, but to learn how to read it and interpret it and to know what to look for, that takes experience. And that's really what this small account challenge is. I picked a single stock. We have low risk. It's only $200. That is a risk. and hopefully all of you could afford to lose that if this went south. We looked at our potential of where south could be. It could drop to $100 and we would lose $100, but we also have the ability for it to go to $400 if we hit 98 cents. And I want to recap with you guys a little bit about that. So the consensus analyst rating has not changed for Verb. It's still on average $3.38, which means that if we putting our $200 in and we got Verb at an average of 0.46 cents, it means that if we hit that consensus analyst rating in an upswing in this market, that would turn our $200 into $1,500. On bearish days like this, you have to look at your overall plan, and you have to ask yourself, okay, I can move $200 down to 100 and lose 100, but on the upside, we can move $200 to potentially $1,500. And we have a better upside, and so I'm still happy with this. I want to see it now hold that 0.36 cents. I don't want to see it break that, but we're going to look at that from week to week. And I just want to remind everybody that if you're not in the small account challenge and you download the link in the description of my video and you put in $200 and you buy it today and you get an average price of 0.38 cents, if we get our move on Verb, which I am optimistic that we will, you would have the potential of moving up. You could sell it lower and you'd have the potential of moving all the way up to 1,800 roughly. So there's even more upside for those who are coming late to the party. All right, that's basically it. I've got a couple other great videos planned for you guys this week. I am going to start a video here, ideally Wednesday, on the fundamentals to shorting the market. That's a great perspective on a day this red. When you see red days, you want to get excited if you're prepared to short the market, and that's what I want to try to prepare you guys for. I just want to say again, thank you for letting me be part of your financial journey. Hit that like on the way out and have a great day. Talk to you later.